Good morning, everyone. Good morning.
Morning, Luca.
You can hear me okay, I hope, yeah?
Yeah, clear as a bell.
Fantastic. So let me just the last finishing touches to this and we'll get started. So anybody, I don't see anybody in here. Some of you will be meeting live tomorrow at the Wealth Acceleration Workshop in London. So that'll be nice after a long time to start seeing people face to face, a social event. We had a kind of like a couple of those in London, and it's so nice after so long being able to finally talk face to face rather than on on Zoom. As much as we like Zoom, I think by now most people have got sick of it after this long. But anyway, can I ask any of you to jump in as a co-host? I can concentrate on the Eric. Yep, I will make you co-host. Okay, that's it now. You co-host, and let's get into today's today's chat straight away. Now, the market is still being dominated by what happened last week with the as you know, with the Terra Luna debacle, and then with the and also with the drop in prices for the whole market. And let me just go with you, just have a look at the charts, and we can see what how it is represented by the trading screens. Okay. Sorry, was I muted? Could you hear me? Yeah. Okay. I don't know why I got a message to unmute. It should be okay now. Okay. So this is a daily chart. We'll just have a look at the 1 hour chart so we can have a little bit more of a view about what went on last week. So this is where we where are we now? It's 20th of May. So I'll just get this always in the way. Okay. So if we look about a week ago, we started from roughly about so this is kind of like a 2 weeks chart. We went from 40,000 all the way down to 26. And that was the week before last, and we talked about it already in last week's crypto hour, and we can see that this week we've just been going sideways. Okay, so obviously we recovered from from the low, which was about 26,700, and now we're hovering around the $30,000 mark. And where the market is trying to decide what the next move is going to be. So is it going to be down? Is it going to be up? Now, and this is something that I wanted to, a few things I wanted to show you, because not just telling you, okay, buy now or sell now. It's not as easy as that. Is to have a kind of like if we can, a detached look at these assets and trying to understand, what's happening that is causing this. It is interesting to, many of you would have heard about Mike Novogratz, which is the founder of Galaxy Digital, and which recently came out talking about about this crash, and he was reminding, so we're talking about all his investors and all his readers, that central banks are unwinding a massive liquidity bubble created by pumping trillions of dollars into the financial system in an effort to fight the economic fallout from the pandemic. Okay, now this particular backdrop put a lot of pressure on the Luna token, and the reserves are located for backing the UST stablecoin. Now, the UST stablecoin has seen an incredible growth, powered by the 18% and more yield that was offered by Anchor Protocol, which eventually dominated all other use cases in the Terra blockchain. So the pressure on the reserve asset coupled with the UST withdrawals triggered a kind of like a bank run on these particular crypto assets. So this was kind of like an experiment, a creation of an algorithmic stablecoin that could power liquidity within the crypto industry. Now we're going a little bit more into this in a second, but this is kind of like his conclusion at the end of the day, that this was a kind of an experiment that went wrong. It doesn't mean it was a scam or it was a rug pull or anything like that. It's just something that was that wasn't quite as solid as they thought it would be, and it was affected badly by this kind of this one-off event, let's say, of like a bank run, let's say, in the crypto world. Now, if we go into kind of like a little bit more detail into, this is the letter that he published on Twitter, that explains about their involvement, the Galaxy Digital involvement in the Terra Luna projects. They started investing in this in Q4 2020, using their capital. Okay, and this is the reason why, and this is interesting because it's interesting to see. This is kind of like a massive investment group. Okay, so it's telling you what the institutional investors are looking at. Now, the reason for investing in Luna was centered around the expansion of blockchain native payment systems. Okay, so they were looking at the Chai app that was built on Terra, had more than 1.10 million users, and was one of the top 5 finance app in South Korea. That they consider that very high, significant growth potential. So they were looking at this as an example of a real world use case for crypto. So they've invested in 2020, and the ecosystem grew very much. In 2021, Terra blockchain really exploded. Okay, so and went from a few dollars as it were to over $110 at its highest. So they were looking for to follow the use of the project, the whole project and the ecosystem itself. Now, they were saying that the underlying blockchain was Terra, had hundreds of projects that were built on it, and a very large world-class list of investors. So it was gaining very serious traction. Now, what happened, and this is kind of like it's easy to to say this as an aftermath after the event has already happened, but nobody saw this coming just before a couple of weeks ago. Now, the global macro backdrop, because this is what we've got to look at, is an investment class, and we got to look at compared to other investment classes. Now, cryptocurrency is new technology, so it's considered a risk asset. Okay, so investment class is more risky than other investments. So it's riskier than, for example, investing in stocks of water company providers, and or electricity or gas or other things that are stable. Or maybe day-to-day stables like Unilever, for example, provides. So it's seen as a more risky asset class in general, and not only crypto, but also if we see technology stocks like growth stocks with negative cash flow are down as much as 50 to 70% this year. Now, this is excluding crypto. Okay, so we are talking about stocks on for example, on the Nasdaq and things that are not. So they are growing very much. They are not yet generating a positive cash flow. So they, in a way, they're burning cash because they are innovating. They starting projects that are not mature yet, but they got huge growth potential. So within this backdrop, we can see the Bitcoin and Ethereum down about 60% from all-time highs, and most altcoins are down on average of 80%. Now, and this in central, on top of this, the central bankers are in the early stage, unwinding this massive liquidity bubble. Okay, was fueled by all the fiscal and monetary policy injections, and this is all the way across the globe. So it's not just one country, not just for the US dollar or the pound or anything else, but every country in the world did the same thing during the pandemic. Okay, so looking at all this, so the scenario that happened was what we said, a kind of like a run on the bank, but in crypto. And the UST had started investing in other assets to reinforce the coin just for an event like this. So they had bought Bitcoin, they had bought Avalanche coins, but even those were not enough to to actually withstand the flood of selling pressure that they experienced. So this will tell you what is going on. To say is that it says a few good idea when you invest in, especially in crypto investing. It says keep a diversified portfolio, take profits along the way, have risk management in place, and understand that all investments happen in a macro framework. So nothing will grow on its own, but we need to look at the whole economy when we are making investments. Okay, and this then is talking about what Galaxy did, which is not really interested in, but what does this all mean for the future of crypto? And this is important because, let's say, crypto is not going away, and the amount of human capital moving into the space, so all the developers, the VCs, and everything, they are coming to the space. It's growing even when the prices are going down. So this is because they're building decentralized infrastructure that allows value and ownership to flow as freely as information on the internet. Okay, so all this process is not slowing down. And especially when we look at the metaverse, and the GDP of the metaverse is growing again very, very quickly, not just in terms of projects that are doing well, but in terms of venture capital that is backing new projects that are launching on the metaverse. So it says that the community is resilient, has a shared belief in a new way of doing things, and this is probably the most important thing. Oh, sorry, I was trying to highlight this, but as a shared belief in a new way of doing things. And this, in a way, in a phrase, I think this can summarize crypto in a sentence. Okay, that everybody that is part of crypto has a shared belief in a new way of doing things. Okay, and the assurance that this is the very start of this process. Okay, and then it goes to say this does not mean that the crypto market will bottom and head straight back up. It will take restructuring, a redemption cycle, consolidation, and renewed confidence in crypto. Like crypto moves in cycles, and we just witnessed a big one. Okay, so this is to make you realize how even the institutions are looking at what just happened, and more widely at what happened in the first quarter of 2021. There's an interesting image that I wanted to show you. I think is this one. Okay, this one, as we were talking about, it tells you how the new money that is flowing into crypto, that's funding deals, where this money is going to. Okay, and if you can see that the largest amount of investments are in the NFT gaming sector. Okay, have a look at this, the number of deals just in this sector, for example. Then followed by DeFi, infrastructure, trading and brokerage, Web3, crypto financial service, enterprise, and then data, analytics, and information. Okay, these are the verticals they are more invested in. And we're not talking about necessarily this is going to be the most successful, but I'm thinking this way where most of the projects are being funded by new money. Okay, so by venture capital. So it's interesting to see these things. And now we're going to get a little bit technical. So I'm going to show you a few charts, and then we talk about different things. Now, one of the fallout out of this scam, let me just close some tabs so it gets a little bit more easy to maneuver. Now, one of the fallouts of this is the there is now an increase in looks into stable coins and the security of it. So generally, we can see that there is more people now are more and more they're supporting and they're trusting, I would say, more than supporting USDC now as the main stable coin over USDT. Okay, so we can see the here the supply of Tether. Okay, that is that's kind of like bottoming and going down. You can see this, the all-time high at 83, and now is sitting at 75, while at the same time the supply of USDC is growing. Okay, so this is important because that means, okay, now people are really looking and thinking, well, some of these stable coins may struggle to hold their peg to the dollars. So let's say which one is the safest option if you want to keep your coins in stable coins, and is increasing the USDC is seen as the preferred option. There's another thing. Where is it? Sorry, I've got so many tabs open. Okay, this is talking about Tether in particular, and this is why also people are moving to USDC rather than Tether. Now, the big thing with Tether, and still is not transparent exactly how the reserves of Tether are formed. But the one thing that came out is that a lot of the reserves was in commercial paper. So that commercial paper means a loan, kind of like a company bonds, company loans, that kind of thing. So which doesn't have a strong backing in case the company was to go bust, for example, or if they went into difficulty. So they're not as solid as maybe gilts and national bonds are, like treasury bills and so on. So what they are doing over time, they are reducing the amount of commercial paper that they hold in reserve, and this amount has gone down 20% since the 1st of April, or at least this is what they are saying. They also slightly reduced the bank deposits, and they increased by 13% the amount of treasury bills that they hold. And so that now represents about half of all Tether reserves. And now this report comes out at the same time as the USD problem. And this at the moment, both USDT and USDC are not having any trouble keeping their peg at $1, but we're not sure exactly what could happen in the future. Now, make your own judgment, do your own research if you want, and if you hold in stable coins, make sure that you make you spend some time studying these projects and other projects out there to see which one is the safest for you to hold your value. Where are we? So these are some analysis, okay, and it becomes a little bit technical. So we're talking about on-chain Bitcoin analysis here, and we're talking about realized losses. So on Bitcoin, as I said to you before, we can see the whole life of a purchased coin. So we know exactly when a coin is sold, if it has been sold at a profit or at a loss. That shows, the analysis shows in May day 12, when we had the big drop and we had the the Luna fiasco, we can see that we had almost the all-time high of realized losses. Okay, this is on May 12th, the realized losses spiked to 1.5 billion. So holders of Bitcoin actually lost 1.5 billion of in dollar value. This is not, sorry, maybe I'm incorrect. It's not holders of Bitcoin, so people who sold Bitcoin. Okay, and so we can see in another graph, this is the net realized profit and loss. So that all the positions that are closed, how many of those positions? So what's the balance? Are they more positions in profit than loss, or the other way around? When it is green, it means that there are more profits than losses, and when it's red, it's the other way around. as we can see here, if you can see here the black circle, and we can see the green and red graph, we can see now that this market downturn was heavier than the one we had in January, is heavier than the one we had in July 2022, and is not far off from where we were at March 2020, when Bitcoin was at $5,000 and less. Now, so these are all kind of like indicators, together with some technical analysis that you might want to use, something like the relative strength index or the MACD or other indicators of the sort. These kind of many different indicators are telling us that we are in oversold territory. Depending on the indicator that you use, some are more aggressive than others. But if we see here, for example, at the moment we're still in a very, very extreme fear position. If we use the fear and greed index, okay, and we've been in that position now for a while. Last month we were at 27. Now we are at 13. Last week was at 12. So people are still keeping well away. Okay, and if we look at this one in particular, okay, this is a chart from Rect Capital. You want to follow them. So this is the Bitcoin RSI, so the relative strength index. And when it gets to the to 30 and below, then we are looking at oversold territory. And we can see what happened in the past when we were in these areas. Now, it doesn't mean that as he enters the area, that's the bottom, so it can carry on going down, very easily. But I'm just showing you that historically, so this doesn't reach these areas very often. So we were there, we are getting there now. We were there in 2020, but even in 2020, we didn't quite reach that point. We were there in 2019, we were there in 2015. So this is kind of like a multi-year chart, going all the way from the 2012. So in Bitcoin history, it's only a handful of time that it's been in an oversold position as much as we are now. So just make your own judgment. So this is not investment advice, but if you look at it long term, you will consider this as high value. Okay, could it go lower than this? Absolutely. Could it go down to 20? Could it go down to 10? Absolutely, it could. But just consider that now we are approaching that kind of like high value area where, as you can see by the previous charts, when there is like 1.5 billion that people have lost, it means that most of the small holders are running out of Bitcoin positions to sell because they pretty much got out of the market. So pretty much who is left at the moment in Bitcoin are the largest holders. Okay, and that should it should tell you something already, that the people that have large positions are actually added to those positions, and the people who have small positions and that more recent entrants have sold off and moved away. On other news, now let me see. Let me just come out, just close things as we go around. Just to see, where are we now? So this is another thing. So we'll keep at the moment on Bitcoin, okay? And this is an analysis on the Q1, and it's saying that CryptoQuant is an analysis company that does analysis on crypto and different things, and they're looking at who was mainly trading Bitcoin in Q1, and saying it's been dominated by institutional investors. I mean, we already knew this, but it's nice to get confirmation by on-chain analysis and by looking at volume at Coinbase, for example, from institutional investors. Okay, so the retail traders represented a fraction of the total volume during the first few months of the year. So 76% of the volume in Coinbase, that is, obviously Coinbase is not the only exchange, but is indicative, at least because most of the US volume is going through Coinbase. So 76% of trading volume in Coinbase came from institutional investors in the first quarter. Okay, so only 24% came from retail investors. And this is why, as I said to you before, we got to think of the macroeconomy, because institutional investors think about asset rotation. So when we are approaching a let's say a recession, and as we heard before, as we heard of this week, new levels of inflation, over 9% in the UK. So very, very large news, but at the same time, the economy is slowing down. So we're very likely to get into a position of, if you heard this phrase, stagflation, that means a stagnating economy and high inflation. Okay, so that is not good. I just say, I'm not going into detail, but definitely I can tell you that is not good for the economy, because what it means is that the economy is not growing, but there is high inflation. So what can a government, what can the central bankers do? Because normally what they do to reduce inflation, they raise interest rates. Now, by raising interest rates, you basically downplay the economy, because you raise the costs of doing business, basically. And as a result, the economy will slow down. So by raising interest rates, in a way, you guarantee that the economy is going to go into a recession. And what happens into a recession? If you think about it from the government point of view, all they're interested in is raising the cumulative tax revenue. Okay, so if the economy is going down, the businesses are not making as much money, the employees of these businesses are not earning as much, and as a result, they're not paying as much tax. So, when there is a big flow of money from the government, with all the money that's been printed in this past couple of years, and it is a huge amount of money, the only way, I mean, no government will ever be able to repay, but what most governments do is, if we grow the economy at a faster pace, then the growth in the economy will mean that the debt will, in percentage terms, become smaller. So let's say that the debt of a country is, let's say, 100% of GDP. Now, if that GDP grows more than the interest that is paid to repay the debt, then in time, that debt in percentage terms, although it will grow in monetary terms, it will become maybe 99, 98, 97% of the GDP and so on. So the government rely on the economy growing to pay off the debt in a way, or to make the debt less important. Like, for example, you might have bought a house 30 years ago at, let's say, I'm in the UK, so let's say £50,000. And if you still have, and say you borrowed all the money to buy the house. So the moment when you bought it, you owed 100% of the value of the house in your mortgage. 30 years later, that house now would be worth maybe 500,000. Even if you hadn't paid a single pound of that initial loan, initial mortgage, now, you still own the same monetary amount, so the £55,000, but the house now is worth 10 times more. So the loan as a percentage of the price of the house now is only 10% instead of being 100%. And also, in the same time, your wages would have gone from maybe £15,000 a year to an average of 40, 45, 50,000 a year. So you see what I'm saying. This is the same way that the governments are used to reduce the amount of debt that the country has to basically carry over. Now let's go into slightly a few types of different news. Now, what happened with Luna and Terra, obviously, and the stable coins, has not gone unnoticed by governments and regulators, and now are trying to step up their cooperation to come up with some meaningful way to regulate crypto, but if not, crypto, at least the stable coin market. And as I said before, that would be in a way welcome for the crypto industry. As I say, the officials from Canada, France, Germany, Italy, Japan, the United Kingdom, and the United States were meeting in Germany following a G7 foreign minister meeting earlier in the year. Okay, and then they come up with this thing: the G7 urges the FSB, the Financial Stability Board, to advance the swift development and implementation of consistent and comprehensive regulation. So basically, they're not saying anything really. They're just saying, come on, let's get on with it. Let's do something about it. Okay, that's a translation, the technical translation of that press release. Now, on other things, this is not news, because it would have been news for the past 4 years if that was true. But it's funny to say, Ethereum merge coming in August if everything goes to plan. Yeah, kind of like they've been saying that for the past 4 years. Now, one thing, the merge is when the Ethereum will go from proof of work to proof of stake. Obviously, we've had that. It's been in the works for years. It was supposed to happen around kind of like June time. Now they're telling, well, it's not going to be that. It's going to be August. Probably is going to be even later because they're getting closer to it. But honestly, they've been going at it for years. Okay, and nobody can say exactly when it is going to happen. Okay. They are saying that the merge is ready. They're now only testing, and they expect the merge to happen in August. So let's hope so, because that would be good news for the whole crypto industry. Okay. On other things, this is really interesting. Okay. I don't know if any of you use FTX as an exchange. It's one of the newest, but the more innovative exchanges out there. And its founder has actually bought a 70% stake of Robinhood. Okay, which some of you may use or some of you may know as well. Kind of like it's a free, commission-free stock purchasing app. Okay, and what they are doing, they are allowing people to trade stocks with stable coins. Okay, so basically they're combining stock and crypto trading, which is what we've been talking about before. Kind of like the crypto market is moving into more traditional markets, okay, and it is starting to annoy, let's put it that way, a lot of traditional players, because this is kind of like moves like this. Already Robinhood had a big inroad into stocks and share investing, and this is going to be even more because obviously FTX is a very popular exchange for traders. So now that they can combine two things in the same place, it means there will be more cash. We'll move to something like this, because it gives them more options to trade different asset classes as well in one place, and also you can do it away from the banking system and any limitation you have in there, and it's much easier to move money around in the crypto space. Okay. This is interesting. I'll put this in the chat. So if any of you want to listen to this podcast, I think it's one of those things that are interesting to talk to listen to, because so we're talking about Sergey Nazarov is the co-founder of Chainlink. As you know, Chainlink is the biggest oracle. That is now cross-chain as well, in the sense that they obviously was born as an Ethereum oracle, now is used in a number of different blockchains, and I know it's also working with Cardano as well to be on Cardano too. What does an oracle do? An oracle tells these smart contracts things that happen in the real world. Okay, so a smart contract is between two people. They may say, when this happens, then when event A happens, action B will take place. Now, who tells this smart contract that event A happened or didn't happen? That's an oracle. Okay, whatever the event B we decide to be, whether it's the price of the dollar against the euro, or where it is if it's raining in Wimbledon on the first day of the tennis, or whatever event you might think of, Chainlink supplies that data to the smart contracts, because smart contracts are kind of like deaf and blind, really. They need to be told everything that's going on, and they can only be told by an oracle, whether it's an outside oracle or if it's built as part of the project itself. But it will need a way of knowing what's going on in the real world. So have I put it in the chat? Yeah. Okay, so you can click on there if you want to listen to the conversation, which is very interesting. Other news, this is interesting. Aave, those of you that know Aave is a big DeFi project on Ethereum, originally now on different protocols as well, different blockchains. Has launched Lens protocol, which is a social media protocol, which is similar to Twitter in a way, but powered by blockchain technology. So it's a decentralized competitor to Twitter and Facebook. Now, have a look yourself if something that interests you. Again, Lens protocol. I'll put that in the chat as well, so you can copy it. Okay, you can see if it's something that you like or not. But there's been a lot of discussion in the crypto world about having social media in using blockchain technology, because nobody likes the fact that whether it's Facebook, whether it's Google, whether it's Twitter, have the power to silence people. Whether it's wanted to or not, and it would be a much better world, social media world, if these rules are, the decisions to what you can and cannot do in these things, it's rule based rather than based on person A saying, I don't like you, you get off my platform. Especially when these platforms now are the main way that people consume information. Okay, so they can't just say, well, it's if you don't like it, go away, because it's more than liking a platform or not. It's a kind of, it should be governed by the same rules that govern television, radio, and other types printed media and so on, because it's a new way of consuming information from the users. Okay, move on to the next one. This is interesting. They say the UK goes lightning. Okay, this is again what we've been talking about, kind of the ability to spend money, your crypto, directly in the shops. Now, Lightning, for those of you that don't know it, it's a new way that you can spend your kind of Bitcoins using slightly different technology than to do a normal Bitcoin transaction. So your transactions stay on the local devices. They use the transaction until certain point when they are reported on the blockchain, which makes Bitcoin transaction extremely cheap, although not as secure as a normal Bitcoin transaction. But it is it's the way that's being used to do low-level Bitcoin transactions. Okay, so if you want to buy a coffee or buy the newspaper, you could use Lightning, and you couldn't use Bitcoin because the transaction will cost you more than what you are buying. But the news is that they launched this Bolt card, which is a way of using it at the point of sale. So it's a card where you can use your coins using the Lightning network on the point of sale. Now, it's not the ideal solution, because again, in most of the cases, if the retailers are not ready for it, what it will do, it will just translate your Bitcoins into fiat currency, or your fiat currency into Bitcoin. But there is this option to do it. There is also a problem with that, is that it lacks a screen, so you cannot see exactly, so you cannot verify that you're being charged the right amount from the retailer, and this is a problem. So we'll see what, once actually is rolled out onto retailers, how it will look, and if it's something that would be good to use or not, because most people at the moment, they use Bitcoin as to do transaction, they do it from their phone, scanning a QR code and then making the transaction. This is slightly different. You tap a card like you use any normal credit card. Now, at the moment it's being rolled out on the Isle of Man, so a very small pilot. Is about 20 different retailers that it's being tested on, but it would soon then start appearing in the UK. Now, at the same time, we've heard about the app Strike, It's used in, for example, in the US, and it's used in, in El Salvador. This is the app that helped them build the kind of the Bitcoin economy in El Salvador. Said now that they, basically the Strike app will be able to be used as a form of payment in a large number of businesses in the US. Okay, so Strike partnered with Blackhawk and NCR to bring Bitcoin payments to hundreds of thousands of point-of-sale terminals in everyday businesses across the US. Okay, this includes hypermarkets, major stores, and every fast food chain. Okay, so this is big again, because obviously it's at the moment is limited to Bitcoin, but still it's crypto that you'll be able to use directly. So it's not, buying it for, for stable coin. So you don't. Obviously, there must be a price translation because you buy your Big Mac and you pay in dollars. Okay, but you would pay directly in Bitcoin, and the retailer would receive directly Bitcoin. And so that's the difference. But on the so on your side as a transaction, you only see the Bitcoin transaction. You don't see the other side. The retailer on their side of the app can decide if they want to take the payment in Bitcoin or if to convert it into the preferred method of payments, whether it's dollars, pounds, or whatever the local currency may be. But this Vault card is the first example of a physical card in the UK that you can use directly to the use of the Lightning Network. Now, talking about Terra, and they are going through talks about how to restart the blockchain. They are talking about giving the people that held Luna and EOS tokens before the attack, and stakers, they're supposed to receive 30% of the value that they held in new tokens. Now we'll see exactly. I mean, it's still under discussion, so we'll see exactly what happens. And some also post-attack holders will receive some funds as well. So so there is, hopefully we'll see in the future the Terra blockchain being reborn. Exactly what format that will take remains to be seen, but it's being discussed right at the moment. Now, this is another article that talks about Mashinsky is the CEO of Celsius, which is a lending and staking platform, and basically saying that the drop in Luna and USD was caused by what he calls the sharks of Wall Street. Okay, so on big institutional investors, they are trying to crush some of the projects that they see their vulnerabilities to actually get most of the value out of them. Okay, so they're saying they're not just, obviously they crashed Luna and UST. Now they're looking for other projects that they could crash as well. So what he said, they are circling around other projects. They say they can smell blood in the water like a shark and are causing instability of several crypto projects. So they are causing the price of Celsius to drop, and they try to attack other stable coins as well. So we will see. Again, it's a very, very uncertain times right now. But now the point is that now what he calls the sharks of Wall Street are now swimming in crypto waters. Okay, so they are looking for opportunity in this area for projects that can be exploited. Okay, so still, I would say it's not kind of like the time to jump into anything fit first, but it is a good time. It's a fertile time if you have cash sitting on the side and you are ready for investing in crypto. As you were saying, we are in a high value time right now when we look at the long-term charts of cryptocurrency price appreciation, in history from its inception to where we are today. Okay, so let me stop sharing now. I think I've gone on for about 3/4 of an hour, which is more than I normally talk. But I think there was a lot to cover today. So let's start now. Any questions that you guys might have? So there are no questions here in the chat. So anybody wants to unmute themselves and ask questions? One, don't be shy, and if you could show your face as well, would be nice. If you turn your cameras on, so I'm not just looking at the black screen with your name. Good morning, Jonathan. Good morning. I remind everybody that following this, Jonathan also holds a call at 9:30 for all things Cardano. So Jonathan, feel free to post the link again on the chat box so people can find you easily.
Thank you, Luca.
Yeah, no problem at all.
Stan's got his hand.
Yeah, you got your hand up.
Thanks, Luca. 6 months ago, if you weren't in Bitcoin and you wanted exposure to Bitcoin, you could have just bought some MicroStrategy, just for the sheer volume they had on their balance sheet. I've noticed that MicroStrategy's got $3.3 billion worth of Bitcoin. Their market cap at the moment is 2.3 billion.
Yep.
So complete reversal. So you might think that might be an opportunity or to get into MicroStrategy as a buy compared to when it was double the price where it may have been expensive. What worries me, though, is that Michael Saylor is on the record as saying that he can afford for Bitcoin to fall down to $3,000 before he needs to put any more funds in.
Yeah.
Now, that's what worries me between 30,000 and 3,000. You're talking about it. It could go up, it could come down. And with the markets the way at the moment, and he is such a big player and a stubborn player as well, that he won't sell. But when push comes to shove and you've got to look after your balance sheet, I'm not sure where the panic stations start.
Okay, if you're talking about MicroStrategy, I mean, my view is that, I mean, the mistake for me is made is not so much saying that because Bitcoin is unlikely to get to that level again, but is putting another thing where he's saying some of the Bitcoins he bought them on basically on borrowed money, on leverage positions by putting his Bitcoin they already had as collateral and borrowed more money on it. So he's leveraged his Bitcoin position. So some of those leverage position would unwind at 21,000. So he would need to sell, to be liquidated basically at 21,000 unless he puts more money in. I mean, he's already also, I mean, he's gone on record saying he's restructuring some of these loans so they can, you could take a hit even if it went lower than that. But at the moment, that is almost like put a target on his back. Telling everybody, okay, see if you can push Bitcoin price to 21 or less. So that's a worry in, when you're talking about MicroStrategy, not so much that, because they will keep their Bitcoins, they spot Bitcoin that they have, obviously, because their purchase price is, I think the average is about 36, 37 from all the Bitcoins that they bought. They've done dollar cost averaging, so they bought as high as 48.50. And so a moment, so some of that they bought at 5,000, some of it they bought at 50,000. Okay, the average is about 37, 38. So they won't sell, but they might be forced to sell some of it. On the other side, obviously, they keep making profits on MicroStrategy as a company, and obviously those profits are likely to reinvest in that. Now, he could use those profits to kind of deleverage and pay back some of these leveraged loans. We don't know. But it is that's the risk that you take, if you're talking about MicroStrategy. I agree with you. It is in kind of like, again, it's a value at the moment, but there is always that risk.
Because if you start talking about the sharks of Wall Street, this is exactly the opportunities they're looking for.
Exactly that. Yeah. No, I agree with you. Good analysis, Dan. Okay. Anybody else? Is there something else in the chat? Let me see. Oh, code sound. That's the thing. That's the link. So it's in the chat now. If you want to go and follow Jonathan 9:30 for his Discord Discord event they hold every Friday as well. Please do. We are friends. Jonathan is a friend of this event, and we are friends of his as well. And I'll be meeting you tomorrow again, Jonathan. Yeah.
Yeah, looking forward to that.
Yeah, so that's fantastic. Jonathan coming to our Wealth Acceleration workshop in London tomorrow, which is going to be fantastic. 60 people registered, so going to be a big event. And
Wow.
we'll post the images, the photos that we take online. Hopefully from earlier on in the day, not so much from late at night. Okay, when it might be a little bit compromising. Put it that way, but yeah, it's gonna be a really good day. Okay, any more questions, guys? Bear in mind I will need to go on time today at 9 o'clock because I need to go and actually meet Mark and the rest of the team to prepare for tomorrow. Okay, you're all very silent today. You're all very quiet. No questions whatsoever.
No, we're depressed that we're not in London.
Oh, I know. It's a bit. I mean, I do understand it's a bit of a brutal journey. I do remember I've never been to Australia and New Zealand actually, but we went to Fiji for a honeymoon, and it took us like 28 hours of traveling and 3 plane changes, and so I couldn't fit my shoes in when I arrived. My ankles, were kind of treble the size. So I know it's brutal. It's brutal.
Yes, but isn't it raining in London today?
Yesterday was beautiful. Actually, it was about 23.
But today
is grey. It's not raining yet. But it might rain.
I'm on my way from Barcelona, so I'm leaving beautiful to go to rainy London.
I find Tanzania was funny because I was talking to the guys that just arrived from Australia, and I think a couple of days ago was the hottest day in the UK this year. And kind of everybody that went, as I go out of the house, everybody's in kind of like shorts and flip-flops, and then you are John and Beck and the others just wearing jumpers, at 24 degrees. That for us, it's just like we were just undressing, and then bathing in the fountains, Then it's just like, it was a bit chilly today. Okay, if there are no questions, Jonathan, do you want to have a little spot about Cardano to say what's going on in the community this week? Sorry to put you on the spot, but
yeah, no, that's fine. I actually just wanted to, because I was very interested in that podcast that you just posted. I'm going to go and have a listen to that because I know Chainlink's involved in JED token and that, but I've not actually got my head around exactly how the whole of the JED ecosystem is going to work, but it's interesting. I've been playing with the testnet, but there's a YouTube podcast from Lex Friedman, another marathon, but with Safidin Ammous, who's an economist. I thought it was really interesting. I don't know if you've seen that, Luca, but
I haven't yet actually. If you got the link, pop it in the chat because I love him. I just have been so busy this past couple of weeks with with what's going on and with the community that I haven't really had time to do extensive listening to things. But I'll definitely love to.
And with Lex Friedman, you have to take bite-sized chunks, don't you? Because he's this is another 4-hour marathon, but the guy who's being interviewed really knows his stuff. So it's gone through the whole history of the formation of the fiat economy and how that is going to interplay with crypto as it develops. So very interesting stuff, really good.
Excellent. That's definitely normally what I do with Lex Friedman. I kind of like put him on in the background while I'm doing other stuff. So I don't sit in front of the computer and watch him because it's just like just couldn't do that for 5 hours. Although it's very interesting. Everybody's got there, but just as I'm driving or doing other things, I have him on in the background. And sometimes if it's something that's really interesting, then I just like I wind back and listen to it again if I really want to concentrate on a particular passage. Very difficult to keep your attention going for if you listen to it in one go for 5 hours. And some of the things they talk about are actually quite deep as well, so not like straightforward.
You're going to need to stop and go and research to understand the last sentence sometimes as well. So
yeah, exactly.
Very good. So one interesting thing that was happening in the community just last night was we're actually starting to look at community credentials. So this is using blockchain to provide trust and verified skill recognition within the community. And it's sort of a precursor to going on to what I see as is going to be, the whole CV employment industry being shaken up. Because actually, if you've got your credentials on chain, you don't need to be sending out CVs and revealing your whole history necessarily. It can just be the pertinent things to the job that you're doing, or it could just be the education that you've had versus the work experience, so on and so forth. So if you're applying to a competitor of a job, you might want to reveal that information, but not to other parties and things like that. So the community credential is like a starting place. And in the Project Catalyst process, to actually collect your funds, if you've won funding from the Project Catalyst, which is a $16 million innovation fund, you have to have a proof of life session, and it's really low key, and you kind of think it's a bit haphazard, a bit pulled up by your bootstraps, because it's so young. It's such a young place. So you go into a Zoom call. You have like 5 seconds to say your project name, your name, and then that's your proof of life, and it sort of defines you as, yes, I'm a human being. I'm not a bot. I'm actually here to collect the funds, put them into my address that I give you, and that's fine. So once, at the moment, that's happening every fund, and every funder has to go through that process. And so there's this whole overhead where someone's ticking things off in a spreadsheet. And so actually the first sort of use case for this is to replace that whole proof of life process with a verified credential that can be issued either by a community body, like a DAO. So we have several DAOs forming, QA DAO and ADAO, or it can then be done by IOG, which is the commercial company. So actually you've got trusted parties. You're creating a web of trust between the parties, the funded and the fundees, that then can be stored on chain, and that can be your ongoing proof of life then in the Project Catalyst system. And it's these sorts of functions that aren't anything to do with monetary exchange. It's just purely, blockchain tech, which is very exciting. And it hasn't changed, despite the markets.
I think as things progress, I think this social element, how blockchain is going to interact with the social and improve things like, obviously a big thing that we were talking about before, for example, is social media. How can that be improved? Because now the social media control this huge amounts of data, of our personal data, that we, potentially we don't want to give anybody else power over that data. So if we find a way that works and we can control it ourselves, it would be great. Actually, one thing before we finish it, I wanted to ask you, and I'm going to ask you more about it tomorrow when I meet you face to face. But the NFTs are booming on Cardano. Is there any kind of projects that work with the dynamic NFTs on Cardano? So NFTs that can be upgraded and added with added features that can change over time after it's been minted?
There are, certainly in the like the metaverse space. So Cornucopia, their NFTs are all going to be objects in their virtual world. So you can buy, like they were talking yesterday about, you can get a metalworking house that you start your metalworking business in the metaverse, and then you can upgrade it so you can extend like you would your home extension, and you can put your forge into an outhouse, and then you can build another roof over it, and it's all these sorts are sort of upgradable NFTs over time. But then you've also
I was thinking more of something like if you had something that would combine NFTs and identity in a way, like, if you are to have your identity that you carry with you, as we were saying, you only share the bits that you want to share once you got your did with different apps. But, over time, let's say, if it's not just, let's say, identity information, but even your preferences that you can store. So if you imagine that later on, you could just plug into a retailer, and so that you can just search for your preferences retailer, but your preferences change over time. You know,
Yeah,
so
yeah.
that kind of thing. That's was piqued my interest in thinking, okay, where's this where the crypto meets the real world. And these are problems that we have every day in the real world. So can they be accommodated by some of these tools like dynamic NFTs? And it's not just limited to a particular project, because obviously a particular project deals with a centralized server in a way. But an NFT, the idea is that you can then use it wherever you want. And then you can share bits of data that you want with the other project.
And again, it's all very young, but probably the highest profile is like your Twitter profile pic can now be an Ethereum NFT, and you can change that over time based on your mood or which project you're eeping into. But yeah, the whole ability to store multiple preferences or credentials is all about this decentralized identity that will be a suite of parameters that you can add to and remove from. And yeah, it's interesting actually with Twitter that Elon Musk has held back his $44 billion deal on Twitter because he's saying that the board are telling him there's only 5% bots on Twitter.
He knows better than that, basically.
Yeah.
Oh, by the way, I just wanted to remind everybody that's one of your area of expertise is you're still going through the Atala Prism program, aren't you?
Yeah, slowly.
So Jonathan is going to be one of the pioneers that are dealing with this identity solution on Cardano. So it's is a good person to talk about things like that if you are looking in that space. And one of the things you can discuss with him in half an hour at 9:30.
Very true. Yeah. So even one of the Atala Prism pioneer working groups has formed Learner Shapes, which is creating credentials for education, and they're the ones that are going to be issuing these DIDs for the proof of life for Catalyst. But yeah, they're on my Atala Prism course and going great guns. So again, it's all collaboration and growth and innovation. It's very exciting. Good things, good work coming out.
Exciting. Kind of like, guys, on that note, I will need to close this call because I need to go and catch a train. Hopefully it doesn't rain because I don't like carrying
Luca,
things.
it is raining.
Oh no, it is raining now. Oh, bugger. Okay.
I wanted to tell you if I was driving, I just stopped. It is raining, so you better take something.
It's where I am just now started, because it was like 2 minutes ago. I looked out of the window, there was nothing. So now, literally this minute started raining. Okay.
Yeah, I have my umbrella packed. All right.
Obviously, it
See you
comes in
tomorrow.
Okay. See you tomorrow, and all of you that are coming tomorrow. I will be happy to meet you in real life, and we'll have we'll share bread and have a drink together. Okay. So see you tomorrow, and for anybody else, I will see you again next week. All right.